It's November 18th, 2024, and this is the Watson Weekly, your essential e-commerce digest. Today on our show, Shopify reported Q3 2024 earnings. Klaviyo reports even better Q3 earnings. New RMW Commerce event being held in January. BigCommerce trying to escape the Alabama mud like My Cousin Vinny. And finally, the Investor Minute, which contains 5 items this week from the world of venture capital, acquisitions, and IPOs. But first, in our shopping cart full of news, Shopify reports Q3 2024 earnings. Here are the details just to get started. GMV is up 24%, revenue up 26%, even more, international is up 36% year over year. MRR, or monthly recurring revenue, is up 28%. That's promising because that's a leading revenue indicator. Gross margin is flat to slightly down at 51.7%, or down about 90 basis points. Operating income doubled year over year. That is kind of the mic drop moment. Let's break down by segment. Enterprise, it's a slog, but we're slogging. Some notable names: Fashion File, Reebok, Beauty Counter. Those are the ones that I noted. They have a composability message that they haven't consistently been talking about in the past that they noted on the call. The off-platform Shop Pay button, or what they're calling Shop Pay Express, was adopted by On Running and Victoria's Secret. Sales cycles are taking 6 to 12 months in enterprise, and implementations are taking 6 to 12 months. The CFO says they're only 18 months into their journey, which is why you don't see more brands. The company says that they're here for the long term. And it seems to me that checkout and conversion is the biggest wedge that Shopify has to the enterprise today. Which kind of gets to the comments I had about 6 months ago about Shopify, is that Shopify doesn't have a components plural strategy. They have a component checkout strategy. In terms of the payments business, it's on a tear. Shop Pay grew 42% year over year and is now $17 billion in GMV. Shop Pay is now 40% of gross payment volume. They can launch Shop Pay off-platform in 3 weeks for a customer, which is similar to how long it takes to launch PayPal off-platform. The subscription revenue is notable, up 26% year over year. Shopify Plus is now 31% of monthly recurring revenue. Gross margin for the subscription business is 82.3%. The merchant solutions business, which is dominated by payments, is also chugging along. The gross margin there is 39.7%. POS, or point of sale offline business, GMV is up 27% year over year. The retailer Laura added 150 stores, which is the largest POS migration yet. The fact that Shopify has not launched any enterprise customer with thousands of stores just gives you some idea of where POS is in its journey. It still has a long way to go. B2B is something that was notable there. Their GMV grew over 145% year over year. They're getting early wins in the industrial, scientific, and B2B native companies. The company also claims that they're closing feature gaps quickly. Hello, BigCommerce, and see a $14 billion total addressable market. One of the funniest things I like to track on earnings call is something like euphemisms. For Shopify, they like to refer a lot to their size and shape. What does this mean? Size, essentially it means they don't overhire. And shape, the company likes to maintain a strict ratio of crafters or developers and individual contributors to managers so that the company stays lean and doesn't go pear-shaped. But how does this translate into operating expenses staying fit? Look at these year-over-year numbers. Sales and marketing is up 12% year-over-year. R&D is up 6%, which is basically flat. G&A, or general and administrative expenses, are down 17% year-over-year. Hello, support team. Seems like you were AI roadkill this last year. Just my guess. In any event, this means that as the company adds 24% in gross profit dollars year-over-year, its operating expenses are growing at only 7%. That's a good trend. OpEx as a percentage of revenue is now 32%, which is a 300 to 400 basis point improvement year over year. Some other things I took away from the call. If Shopify can figure out a way to expand gross margins without raising prices, It will be like a turbocharged engine was added to this company. As it stands, payments gross margins seem to slightly degrade over time. And the most promising avenues from my point of view are related to shop, app, and customer acquisition. But it's probably going to be a while. Shopify mentioned that they were brought up in the Gartner Magic Quadrant. The new one or the old one? Asking for a friend. With monthly recurring revenue trending ahead of overall revenue, this could indicate that revenue acceleration on the top line is upcoming. Shopify mentioned that they won't develop an ERP or a CRM solution, that enterprise merchants bring these solutions. But there was no PIM mentioned on the call or product information management system. That makes me think that it's more likely than not that this could happen. In terms of merchant solutions, which is mostly payments, the percent of revenue is holding steady as a percentage of overall at 71.7%. Off-platform Shop Pay and Shopify Checkout seems like a slog, but 1 to 2 wins per quarter is better than 0 wins, right? And in the milk carton alert, meaning has anyone seen these folks? Shopify Sidekick. Was it kicked to the curb? Get it? Shop app. Not much to report, and I kind of expected more. And what Harley said on the call, Shop Cash, sometimes for some merchants, it's impactful. Not exactly a ringing endorsement. But all in all, great earnings. So we'll talk more about this in the future. Our second story. Klaviyo reported even better Q3 2024 earnings. Last week, Klaviyo reported Q3 earnings, and while everything was not 100% rosy, there is a lot to like. Klaviyo has a well-regarded product suite and 34% total revenue growth year over year. EMEA is growing 45% year over year. Klaviyo has an enviable greater than 110% net revenue retention rate. SMS adoption is also going well. Klaviyo mentioned that 80% of its top 50 customers are using it for SMS. And the company has an increasingly multi-product portfolio and platform, and a growing third-party ecosystem of over 400 technology connections. Oh, and by the way, did I mention this other key fact? Klaviyo has a big, slow competitor to take massive share from, Salesforce. This is what I call a massive tailwind. Klaviyo calls it a, quote, durable trend, where a lot of folks are modernizing off old technology. Hello, Salesforce Marketing Cloud. Did I say hello? Actually, I meant goodbye and good riddance. Some other tidbits. The company is expanding its management team with a chief product as well as a chief technology officer. Hopefully this goes well. And the company is mostly competing against single-channel competitors. Attentive, I think, has something to worry about here, even though its product suite is also well-regarded. Consolidation is a strong trend in the market right now. In terms of economic guidance, Klaviyo reported that we're in a value-oriented economy. Especially SMB customers were careful about how many emails and SMS they send. Retention is still fantastic for Klaviyo, however, across all segments. Not all SaaS players can say this right now. Klaviyo is expecting 2025 to look like the second half of 2024. No major changes. All in all, there's a lot to like here, but I'm guessing Wall Street expected higher guidance? To be honest, I'm not really a stock watcher, so your guess is as good as mine. It's hard to find a lot to worry about in the results from a long-term point of view. My previous biggest worry for Klaviyo was cross-sell and upsell. This has kind of been solved from where I sit. The next big thing I think Klaviyo has to solve is, can we sell to the enterprise and how? Our third story. New RMW Commerce event being held in January. Oh no, he didn't. RMW Commerce is hosting its first ever exclusive limited seating event, no NRF ticket required, and like Phil Collins, no jacket required. Sunday, January 12, 2025, from 4 p.m. to 6:30 p.m. Eastern at a location to be revealed. The agenda will be a keynote by yours truly, and we'll talk about the topics in a moment, and this content will be nowhere else. We'll have panel discussion with brand leaders and an exclusive live taping of the Watson Weekend podcast with me, Jessica Lisetsky, and the CEO of Candle Science, my old friend Michael Jones, formerly of eBay, Shutterfly, and Channel Advisor. Finally, this will be wrapped by a special Kaplan's Corner with the always magical Nick Kaplan. Mingle with your fellow brand and retail leaders. Simply, you don't want to miss it, and it will be the See and Be Seen event of NRF 2025. What's better than watching a Watson weekend with topics like, what the fuck is happening at Starbucks? E-commerce grifters, what to do about them? Investors and private equity update from a CEO who exited to Apollo Private Equity. And what people miss about marketing and customer growth from one of the best marketing and product leaders in the business. In terms of my keynote, 2025 planning is hot on everyone's minds. This event will kick off the 5 forces affected e-commerce in 2025, including the cheap consumer and the great trade down, marketing is king, merchandising is queen, the generative brand, retail in the age of AI, the beginning and the end, equity and exits, and the Emperor's new brand playbook. There will be a panel discussion to follow the keynote with brand leaders to be announced. Hit me up on LinkedIn or head to the RMW Commerce website under Resources Events if you want to sign up. And our last story. BigCommerce trying to escape the Alabama mud like My Cousin Vinny. Anyone who watched Marissa Tomei, Mona Lisa Vito, and My Cousin Vinny knows what happens to cars, particularly those without positive traction, when stuck in the Alabama mud. You step on the gas, one tire spins, the other tire does nothing. BigCommerce management has concluded that the spinning tire is the product technology organization, and the doing nothing tire is the sales and marketing teams. A synopsis of the go-to-market issues I heard on the call were low awareness causing them not to see enough deals, not enough sales quota or enough reps or both, not enough pipeline, particularly in business-to-consumer and SMB, sales reps that were chasing some of the wrong deals due to misaligned compensation, the fact that they couldn't upsell or cross-sell easily without a sales rep's involvement, the sales teams were too generalized and not specialized by segment, and the company didn't have deep enough e-commerce expertise on the go-to-market teams. Whew. Other than that, Mrs. Lincoln, how was the play? That's not to say the product teams got off unscathed. Feedonomics and MakeSwift were chastised for not being well integrated. Feedonomics did not have a self-service option, and B2B probably took too long to get integrated at all, seeing as they just got a menu item in the last few months. New CEO Travis Hess, a friend of the program, is looking to install positive traction on the vehicle, and we'll all know when that happens when BigCommerce reaches what's called the SaaS Rule of 40. What is the Rule of 40? It's a popular software as a service founder metric, which is the sum of revenue or ARR growth percentage and profit margin. I would estimate that BigCommerce is somewhere around 20 of this number, which is about half at the moment, with about 7 of that coming from revenue growth and the rest coming from profit. This means that BigCommerce needs to grow probably 3 times as fast as they are now while maintaining profitability levels in order to hit their desired number. In short, this is probably at least a 3-year journey. There was one thing that did pass the Rule of 40 on this call. It's the use of the word discerning. What's that now? As in, BigCommerce is for discerning customers looking for optionality, flexibility, and growth. You still hear echoes of the open SaaS and the composability messaging of BigCommerce. What I did not hear strongly enough on the call is what are their most important buyers, how are they prioritizing things, why that is, and how BigCommerce is differentiated along those buyer priorities. And of course, the elephant in the room, the damn stock price. In short, what we really need to discern is what discerning really means, and if discerning is a shrinking niche or a truly expanding market opportunity. After all, it's complicated to be discerning. It's complicated to sell discerning. Shopify is, of course, trying to be everything to all people. Just get on the bus and we'll figure it out later on. But in peanut butter terms, BigCommerce is choosing the choosy moms choose Jif. That's their message. And speaking of peanut butter, with a market focus of B2C, B2B, and SMB, that's a lot of TLAs. Here's hoping the company's precious resources aren't spread as thin as peanut butter. And my suspicion, though, that some of these other segments are kind of a cover for what really is the true focus, B2B. It's that time, friends, for our Investor Minute. We have 5 items on the menu today. First, Pinstripe reimagines secondhand clothing sales. New York-based Pinstripe connects empty retail spaces with excess clothing, addressing sellers' pain points through in-person sales in partner stores or via delivery. It is an evolution in a sector from marketplaces and platforms like Trove to a hybrid model utilizing stores and technology. Second, UK-based B2B platform Red Cloud Holdings filed for US IPO. UK-based B2B platform Red Cloud Holdings has filed for an initial public offer that could raise up to $86 million in capital. The company operates a platform that services consumer packaged goods trade between brands, distributors, and retailers in a fast-growing emerging markets. Retailers can leverage data and AI tools to make better purchases and inventory decisions from brands and distributors. The company generated $30 million in revenues for the past 12 months, ending in June 2024. Third, marketing tech platform Insider raises $500 million in Series E funding. Insider, an enterprise omnichannel experience and customer engagement marketing platform, has raised $500 million in Series E funding. The company enables brands to deliver personalized customer experiences across digital channels. Insider claims to be the first company to combine predictive AI with customer experience, because, of course you do. One wonders what a personalization platform will do with $500 million, but here we are. Fourth, Bluecore acquires AI shopping assistant Albi. Bluecore, a retail marketing platform, has acquired AI shopping assistant Albi for an undisclosed amount. The acquisition will enable Bluecore to offer AI agents as part of its solutions. Full integration with Albi will be complete and available to retailers in Q1 of 2025. Note that a Bluecore co-founder had left the company to join the startups and start Albi, who his old company has now acquired. Congrats to the Bluecore team on joining the AI revolution. And finally, athleisure brand Vuori raises $825 million in share sale. Activewear maker Vuori has raised $825 million via secondary share sale at a higher valuation of $5.5 billion after raising $400 million in 2021 at a $4 billion valuation. The new funding will be used to open new retail stores as the brand plans to expand beyond 100 stores in 2026 and further develop new key markets in Europe and Asia. Vuori is an outlier as they're selling premium athleisure that retails $100 leggings and $64 sports bras at a time when apparel brands are facing headwinds. And today's final word of the week of November 18, 2024 is holiday. We're in the shoot now, folks. And with apologies to Rich and Marks, hold on to the night. Hold on to the memories. If I could only give you more. And with that, that's all for this week. Till next time, Watsonians. Hi, I'm Rick Watson, CEO and founder of RMW Commerce Consulting and host of the Watson Weekly Podcast, your essential e-commerce digest. Our production partner for the series is Citizen Racecar. The show is produced by Jose Baez. To hear new episodes of the show every Monday morning, subscribe now at rmwcommerce.com/WatsonWeekly and wherever you get your podcasts.